Alright, so today's video is about how to stay green on these funded accounts. And I'm gonna go ahead and do a breakdown on the trades that I took yesterday and tonight. And this is the funded account that we passed last week. Get rid of that. And this is the trades that we took today. We'll go on loose it. And there you go. It's the balance as total P&L. And those are the trades that we took tonight. It hasn't loaded up the percentage yet. But we're gonna break it down. I think in total is about like 4 or 5 trades between yesterday and tonight. Tonight the price action was too good. I couldn't pass on, so I took some trade, and the result was pretty good. Before anything else, I'm mentoring a small group of people very soon. If you want direct access to me with real feedback, one-on-one, on like a clear path on getting funded, and not just theory, not just YouTube videos. Links down below is a private wait list, limited spots, and we're gonna announce it in a few days, probably like 2 or 3 days from now. If you're not on the list, you might miss it. And that's all I said about that. Let's break down the today's trades, and the free content is not going anywhere for those of you who are only interested in the free content. So let's break down the trades. So we're gonna go on the hourly. I usually don't get rid of my lines for YouTube purposes. So this is what we're seeing coming into the morning on the gold. So we had a price that got close through here. So we draw our line, very simple. We just draw our line, set my alert. Went down to 1 minute. And I believe we took 2 trades. Yeah, we took 1 trade here. There we go. I was aiming for that, but I took the trade out early. So that was my first trade. And the reason why I took this one trade, as you can see, the price came here and then consolidated a little bit and straight up go up. So the theory behind it was, I was like, we took both POIs. If we close above it with a inverse for value gap, I'm gonna get in, which was right around here. So I was like, I'm gonna get in right here, and I didn't hesitate. I just got in for a quick 1-to-1. I could have targeted it here, but I just want to have a base hit because the price is not guaranteed it's gonna go hit the external liquidity all the way. Well, in this case it did, but that's not gonna happen every day. So because of that, I took another base hit quickly right after that. I believe it was like somewhere around 60 ticks here. So if you pay attention, I wrote down this 1 minute CCT model. So every time you get an inverse gap and the price closes above a POI very strongly, usually the price comes down and goes in the same fair value gap, and usually touches the same sort of POI on the 1 minute, because times are fractal. Anything that you see that the price does on the 1 hour or 15 minute, it does it on the 1 minute. And when I was looking at the price range, I was like, okay, so the POIs on the 15 minute also aligns with the 1 hour. So that's also a really good indication of a good price action when 2 or 3 time frames they all align to one another. So the reason why I wrote this one, and I took a journal on this, because I always forget when the price closes strongly above it. I can easily put a limit order in here, but then you also have to be okay with it to miss out on a lot of trade, because sometimes once we get an inverse value gap, the price just straight up start going. It's not gonna come back and touches that level. But when you see prices kind of chopping around the same level, there's a very high chance of it come down here and start going up. If we would have put this limit order here, our risk to reward ratio would have been way better. So that one would have made me 1500 and I would have been done for the day. Of course, we We didn't take that one. We took this one because as soon as we closed above it, I just got in. I didn't hesitate. Put my stop loss below this 1 minute candle. I was like, if we inverse this 1 minute gap, I don't want to be in that trade anyway. So then price gave us another opportunity. Came hit this area. Same thing. Same logic apply. We just get rid of this. Get rid of this so you can see it cleaner. So yeah, close above it. We drew our line. Price came close below it. Close above it. As soon as it closed above it, I got in. That was my stop loss 44, and I believe we took out around 60 ticks. So in total, we walked away with around 732. We took a loss on a stream from yesterday video. That's why we only made about 732. It would have been over like 1100. So that was that trade, and of course I hit all those. And let's go look at the price action on the gold. Yeah, the price action was very clean. Like it was very clean. And this is what I mean by clean. This works perfectly with our strategy, the CCT strategy. And I took this trade down here. So on the hourly, let's clean that. If you're wondering what is this blue line is a daily indication level that I thought the price was gonna hit, but it didn't hit it. Doesn't matter, the price usually try to get close to that. As long as you know if you are going from A to Z, that's all that matters. So in here, I had my level here. My level here and here and here. Those are the total soup area. Those are the 15-minute marks. But you could have just got in at the opening of the Asia session because the price cleanly came up, as you can see. Close through it, indication, correction, continuation, which is close above it, close below it. Of course, I missed this one because I'm usually not on the Asia open right away. So I missed this one. I was like, price gonna give us another opportunity. And the volume was very good. When I had my volume on, I saw a massive volume. It created this target, which I usually call it like external liquidity. So the price came back up, price closed below it. I believe I took this trade, but it came to the break even. So I took this trade somewhere around here. Yeah, I put it right here. I had my target in here. I was aiming for the fences, but as soon as we closed 50%, I put my break even. And as you can see, the break even was hit. So I just wait for it to close above it again. Oh, that's another thing, another piece of nugget for you guys. So I had this level, of course. Once we close above it, then I look at the first POI. I also look at like the one of the most recent 15-minute candle. And I also mark this area. Oops. So if the price start going down and we have this obvious target that we're gonna go hit, because the price always when we're on a downtrend and there's a massive candle like closes and it kind of like engineers a external liquidity, the price always like to go and sweep internal liquidity, the internal swings, easier way to say it for you guys to understand. Yeah, it always goes up, most likely at least once per session, to grab all these liquidity and take people's out from their stop losses, and then it delivers cleanly. I've seen this so many times that it's just too obvious at this point. Especially if you have a volume profile that you're like keeping an eye out, because I was looking at it on the on the 5 minute. And on the 5 minute, I saw this massive 5 minute volume. I was like, and then these two blue candles, they had a weaker and a smaller amount of volume. So when you see that, it pretty much is a good indication of fake volume. That means it's just the price is just gonna go grab more liquidity before it delivers to the target. And when you trade from a internal to external, the chance of you winning those trades are extremely high. So yeah, we sweep those liquidity. As soon as we close below these lines again, I got in. My take profits somewhere around here. I didn't even go all the way down there. I just went for a quick base hit. But as you can see, the price did deliver. If you get in on these trades and you take your profit at certain swing area, it's really good. Even though I knew in my bone that we're gonna go take out that price, I still just wanted to get in and get out. It's good not to be greedy. Just take what the market is giving you. That's all I needed. So I got it, and I got out. That's pretty much it on that. Hopefully that was simple enough. Let's go to NQ. NQ this morning, I didn't take any trade even though I had a really good trade setup. So today's setup, I had this area. I had set a alert for this area. The price came here, but unfortunately I was already in that morning gold trade. So when I'm already in a trade, I don't pay attention to, I don't want to like juggle and have and manage two trades on two different assets, even though it would have been a banger trade. It was like, it just straight up went up like 500 ticks. So let me show it to you what I'm talking about. And this is like a 1 minute kind of AMD model. So I have my level here. AMD is like accumulation, manipulation, and then distribution. I saw this. I was and I got the alert, and I saw this. We close above it so cleanly. Just sweep this. Same thing, same concept again from the gold. What did we do? We sweep the internal liquidity, close above it with very strong right before the market opens. This is beautiful. And look at this. Wee. So if I would have gotten on this trade, which I saw, and I should have listened to my gut feelings, and my target was gonna be somewhere around here. I was like, we're probably gonna get a reaction of this level, because whenever we have a support ran through becomes resistant, and resistant ran through becomes a support. That's a quick tip for you guys. That would have been a 538 tick move. So that would have won two contract. That would have made us about 5 grand on that account. So we left a lot of money out, but the price action is really good. From if you've been paying attention, same thing. Look at this, like all day long. We had so many opportunities for long, and then same thing on the way back on the correction. So I had these levels marked, which worked out beautifully. So I had this one, this one, this one. All of them came and hit and start going back down. Let's go down to 15 minute. Yep, same thing on 15 minute. It aligns when the hourly POIs aligns with your 15 minute POI. It just works perfectly. And there's another one here. We didn't quite hit it, but you get the idea. And on the 1 minute. So this is what we see. So the market opened, we closed through this. We went up and closed below it. I got my alert, but I kind of missed it. I kind of got in late. We became above it again. As soon as I saw this candle closure, because it was around here, because we closed through this 1 minute, came above it, closed below it. As soon as we closed above it, I just got in. I think this trade I only got like about 80 ticks out. Yeah, I got around 80. And look how much price delivered. Some Some insane price action, about 300 ticks. Now, of course, you cannot capture all of these. I would have probably targeted this area if I wanted to stay in this trade. I was busy. I just wanted to take a quick base hit. That would have been a, what's the risk to reward ratio? Yeah, that would have been a 1 to 16 risk to reward ratio. Because every time you see this, like, you see this violent move up, a crazy move up always made another crazy move down. It's never gonna be, we never gonna go up and then start going down choppy. If the price gives you a massive reaction of a certain level, the the downward or upward, either way, you usually get the same level of reaction and the same clean price action. So yeah, hopefully that was helpful. As you can see, very clean, multiple opportunities to get in for a short. And the way you find these levels a little bit easier is on the 15-minute. So if you mark your 15 minutes here, for those of you that want to trade the 15-minute, you can mark you can see cleanly come here and get headset. Same thing here, come on headset. Look, you can see coming on headset. And let's go here. Goes above it, close below it. It's just opportunities after opportunities. If I wanted to hold these trades and take all of these trades, I could have possibly make like 5 to 10,000 tonight on those funded accounts. But it's better to develop a habit of taking base hits than to try to go for home runs and build a bad habit. Because today is just one example of having home runs on both NQ and gold, like good good trades. But it's not gonna be like this every day. And the beauty of hitting base hit is because you can hit base hit every day, but you cannot hit home run every day. And I also always have to remind myself, go for base hit, go for base hit, go for base hit. Because what I used to do, I used to either go for a home run or a break even, home run or break even, and that just kills your confidence if you do it that way. But this way, slowly and gradually, you just work it towards a payout. Very simple. And you protect your confidence, and you just build your confidence and your muscle memory. You're developing your eye for the market, break by break, break by break. I trade, even though I only made like $900. I just trade like one contract, one or two contract, and that's it. I could have traded more aggressively, but there's no point. It's just build it break by break and go from there. That's the breakdown for you guys. I'm pretty much done for the trading on this account for today. I'm probably not gonna trade on that account for tomorrow. Probably gonna trade it for some other accounts. All we need on this account is like somewhere between $800 or $1,000 until like the next 3 days to get a payout, and that's it. So love and peace until the next video. See you guys on the next one. Oh, don't forget, like and subscribe, leave a comment with your question. What do you want to see on the next video? And like and leave notification. You already know all the good things that every YouTuber says. Peace.